Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is January 11th, 2014 edition of Market Outlook. Please be sure to sign up for this free video newsletter at our website, www.marketgauge.com, and you'll receive this free every week. So, without further ado, let's get into the markets. Lots of interesting things have occurring across the board in all different types of asset classes. And first, let's cover the spiders, the S&P 500. As you can see, the first 2 weeks of action of this year basically contained within a pretty narrow range. However, we did open up higher on the first day, traded off, and if we take a look at the trading range here, with still above the 10-day moving average, bullish phase strongly intact. We're not largely overbought or oversold. So overall trend in the S&P is intact. Now, what is interesting to note is we did hit the top of this channel line, which I pointed out several weeks ago, and backed off. Now, very critical. The first 2 weeks of the year are often key levels to respect. So 182 on the downside, I would respect as a critical level to hold here. If we take out 182, we'll be under the 10-day moving average, but more important, it will set off a sell signal based on calendar ranges. Conversely, back in very, very strong gear would be the market if we take out the highs of 2014. So right now we're basically sitting right at those highs. So Monday's action and how we move away or back into the trading range already of 2014 is going to be a big tell. But again, if we can get above the highs of 2014, we're back in gear, and there's no telling what we can do. We can have a potential, blow off or parabolic type move above this trend line. Conversely, that 182 level is going to be an important level to watch. Let's take a look at some of the market internals. Since the sell signal, since the buy signal in the middle of December of 2013, we traced out a pretty nice rally. We got fairly overbought, at least on the shorter term. McClellan oscillator sort of sitting in neutral territory, plenty of room to move up or down. So the more intermediate to longer term oscillator sort of in neutral range. However, we did get a sell signal now in the short term indicators, advanced decline and up down volume. Now, generally we like to see both the advanced decline and up down volume confirm rather close to one another. So this is a pretty big spread. We did get the sell signal just at the end of the year, and it really took until just a couple of days ago to confirm that on advanced declines. So I read this whole picture here a little more neutral to slightly negative, but let's watch this hook and see what happens. And if we propel up to and through these levels here, we would then reconfirm the bullish scenario. And basically the sell-off over the last couple days might be all you're going to get. Taking a look at VIX, market sentiment. We're trading in the VIX where the 50-day is below the 200. You're sort of trading at lows. You are a bit on the RSI, a bit to the irrational exuberance territory, but overall pattern extremely positive for the market. There's nothing in here that's showing excessive bullishness relative to the overall trading ranges. So that's still a positive for the market overall. Let's move on to gold, GLD. Interesting. At the beginning of this year, we basically and actually at the end of 2013, we sort of put in a key reversal or a slingshot pattern low. And that has actually confirmed and moved nicely higher. So gold, even though it sort of basically made a new low for the year on 2013, closed in the upper ranges, and then followed through. And we've had a pretty decent sized rally. But interesting, let's take a look in a little bit more detail here. We do have a key level at around 123.20 or so, which is a key swing area. But as you can see, we had this sort of new low, and the following day it took out with a gap that new low pattern. 60-day low, closing in the better part of the range, is pretty good. It really didn't close all that strong. We really like to see it close in the upper 25% of the range. So this one was certainly marginal, but in terms of the overall pattern, we're now testing that 50-day moving average. If we can get above that 50-day moving average and start seeing this thing turn around, this whole level here, and certainly if we can take out this resistance line here, would mean that the bull move in gold might be starting in 2014. Otherwise, what we've just had is just a technical bounce with the 50-day moving average and then continue its downtrend. But again, interesting inflection point. We actually have been trading a bit of silver, which we'll get into in a moment. Let's take a look at bonds and rates. Clearly, as you know, we've been sitting on a key long-term monthly moving average, which we closed beneath it, but not on absolute new lows. We made new lows, but it couldn't close on a monthly basis at that level. Now, with the employment rate sort of been iffy because the participation has been weak, you can see across the board very strong weekly close here. The monthly seems to be potentially putting in a slingshot pattern as well. Now, in this particular case, on the daily chart, different picture than the gold market, but obviously rates and gold are highly related, and it looks like that the pattern here is you did make a slingshot low, had the inside day closed, and has now moved away, and you're trading above the 50-day moving average. You had some really good volume on Friday, closing basically on the highs. So it's possible that we have a long-term, or at least an intermediate term bottom forming, right? Double or triple bottom. A low here, a low here, a low here. That's pretty important. Obviously, the critical level, let's put it in, to really confirm this would be taking out of the 109 level. But for the moment, looks like a potential bottom is in place, at least on a shorter term basis in TLTs, as well as gold. Silver, also interesting. Very, very similar pattern. Now, if you look at the weekly charts, silver is a little bit stronger than what we saw in gold in a sense, because we actually did not make new lows since they were put in the middle of last year. We couldn't quite press the lows, and we are actually closing better. So potential double bottom on the weekly charts. We really need to take out psychologically this all of this action here, which would be about 6 or 7 weeks of action. If we can have a weekly close above 20, I would be pretty convinced that we're going to get a move at least back up to 24, and the short-term weekly moving average, which is the, I believe, let's see what we have here. I believe that's the 65. Yeah, that is the 65-week moving average. So that would set up, we can close above 20, a test all the way up to 24. On the other hand, if we break down below this critical 18 level, your count is about $6. You could test all the way back down to the 12 level. So we're at interesting inflection points here. We're suggesting some bottoming action along with the interest rate picture as well. Gold miners, very similar pattern. Again, not able to make much more progress to the downside through the month of December. You had the drop the first 2 days, sideways action, and again attacking that 50-day. So we have a pretty tight range here, which we can play either way. New lows would suggest a significant move down again, and a move above that declining 50 would suggest a test and a potential turnaround and bottoming formation in gold miners. Now let's take a look at some cannabis stocks that we highlighted in the text version of this. First of all, as you can see, there are quite a number of different plays. These are mostly bulletin board or pink sheet stocks. So some of them trade by appointment only. You have to call up your broker, sign a disclaimer, and they'll submit the trade, and that means that you have to be pretty savvy about how you're handling your orders in these markets, because you're really subject to over-the-counter and pink sheet type trading. So we have Medbox. As you can see, starting off the year, it was trading about 20, and it moved all the way up over $70. So it's now trading back down to 34. That's a pretty good move. I believe Medbox sells medical marijuana through specialized machines. They've improved the technology of the machines. So this one got a particularly interesting play. This is an interesting pattern, and we're going to be keeping an eye on that. One of the pure plays on home-brewed marijuana growing is Grow Life. They've been around a long time. Let's take a look on the monthly charts and see how far back this goes. Okay, well, I guess Grow Life went public in 05. Let's take a look at the daily charts, because that's going to be a little bit more interesting to look at. Okay, here's a stock. Again, these are penny stocks, but they are interesting. At the beginning of the year, it was trading about 15 cents. It ran all the way up within a couple days to almost 45, or a little bit over 45 cents. It's now settling back down around 22. So that is still a good 40-50% move for the year so far. And again, looking at the intraday trading volume, like this one looks like it's almost 120 million shares, trades 27 million shares a day on average, but you can see it's exploded. So you've got medical dispensary stock of marijuana, Grow Life, which is all material needed to grow marijuana plants, and another one that's been in the news as well is CBIS. This one is a stock that has actually held its gains relative to the beginning of the new year a little bit better than others. Again, cheap stock. This was penny stock trading around 4 cents a share. Ran, wow, all the way up to 19 cents or so, and is now backing down to 11. So already about a 50% correction. So look at the increase in volume here. And just in terms of looking at that increase in volume, you can see that this stock has the most persistent volume patterns relative to its past. So you're getting some real interest, legitimate interest, that might possibly sustain. Now, also, just looking at the historical prices here, you can see any close above 20 cents would be significant, meaning all buyers who had bought this stock would be in a strong position, anyone, it'd be pretty hard to short this, but I'm sure there are ways to do it that are not necessarily obvious. Anyone who has shorted the stock, once it gets above 20, would have a loss on it as well. So you might get some additional short covering here. So again, these are some of the more interesting picks. There's probably a list of 20 or 30 different stocks as well. That's it. Bye for now. See you next week. And let's keep track of those calendar ranges and these cannabis stocks for the longer term. Thanks. This is Keith Schneider, CEO, MarketGauge.com.